March 17, 2020. The world is shutting down. Markets are crashing. And deep inside the New York Federal Reserve, a small team activates something called the Overnight Reverse Repo Facility. They call it temporary. They call it emergency relief. They promise it will disappear when the crisis passes. But today, that temporary facility moves $800 billion every single night. How did an emergency backstop become a permanent shadow banking system? And why does no one talk about it? Like this video if you want more deep dives into hidden financial systems. Before we dive into this trillion-dollar rabbit hole, make sure you're subscribed. We expose one hidden financial mechanism every month. Last week we covered the plunge protection team, check it in the description. Today's story changes how you understand modern banking forever. To understand this secret, we need to go back to 2008. Lehman Brothers has just collapsed. Banks stop trusting each other. The Federal Reserve invokes emergency powers under Section 13(3), creating facilities with obscure names, TAF, TSLF, PDCF. Each one labeled temporary. Each one quietly made permanent. This is the playbook. Crisis creates opportunity. Emergency becomes infrastructure. The reverse repo facility sounds boring. It's not. Imagine you're a money market fund with $10 billion in cash. Banks pay you 0% interest. But the Fed comes along and says, give us your $10 billion overnight. We'll give you treasury bonds as collateral. And we'll pay you interest. Suddenly, risk-free yield exists again. But here's the catch. Every dollar in this facility is a dollar not in the real economy. Not funding businesses. Not creating jobs. Parked. Safe. Sterile. Comment below. Should the Fed be allowed to make temporary powers permanent? Narration. Pause and think about this. The Fed creates digital dollars from nothing. Then pays banks to park those digital dollars back at the Fed. It's a closed loop. A financial Ouroboros. What does this mean for inflation? For inequality? Type your thoughts below. I read every comment. By 2023, 102 different institutions use this facility nightly. Not just banks, hedge funds, foreign central banks, government-sponsored enterprises. A parallel banking system has emerged. And its size? It fluctuates between $700 billion and $2.2 trillion daily. This isn't banking. This is financial cloud storage, with the Fed as the ultimate server farm. Normal banking rules. Banks take deposits, make loans, fuel growth. The RRP system. Money goes from Fed right-pointing arrow banks right-pointing arrow back to Fed. The lubricant of capitalism becomes stuck in neutral. Small businesses can't get loans. Startups starve. But Goldman Sachs earns 5% risk-free on billions. This is financial diabetes. Too much sugar in the bloodstream, not reaching the cells that need it. If this makes you angry, you're not alone. Share this video with 3 people. Most Americans have no idea this system exists. But it affects their mortgages, their small business loans, their retirement accounts. Knowledge is the first step toward change. Now the Fed faces an impossible dilemma. They need to fight inflation by raising rates. But higher rates make the RRP facility more attractive. More money floods in. More money leaves the real economy. It's a trap of their own design. The temporary facility has become a permanent parasite on the monetary system. This isn't new. The special drawing rights created in 1969 were temporary. Still here, the Exchange Stabilization Fund from 1934 was emergency. Still here, the pattern is clear. In finance, nothing is more permanent than the temporary solution. Power accretes quietly. Institutions expand silently. Democracy sleeps. If this video gets 50,000 likes, I'll make a follow-up, the exit strategy. How to unwind the Fed's shadow banking empire. I've already researched the 3 possible paths, each more painful than the last. Your engagement decides if we explore them together. So what began as a pandemic emergency has become permanent architecture. $800 billion, 102 institutions, 0 public debate. The reverse repo facility is the perfect metaphor for modern finance. Complexity conceals consequence. Jargon masks justice. And temporary is the most dangerous word in the central banking vocabulary. This has been an investigation into the permanent temporary. If you learned something new, smash that like button. Subscribe and hit the bell for our next exposé. We're diving into central bank digital currencies and how they could eliminate financial privacy forever. I'm your host, and I'll see you in the next one. Until then, question everything. Ta-ta, bye, take care your family.